In this video today, man, I'm gonna go over some stuff that I never went over before, so y'all get locked in. But before I get into it, man, y'all get at me in the comments, man. Say what's up in the comments. Tell me what's your favorite trading strategy, right? Do you like day trading? Do you like swing trading? You like trading penny stocks? Let me know all about it. I'm gonna actually start making swing trading content and some penny stock trading content for y'all too. So don't worry about it, man. Just like and subscribe. But let me get right into it, right? So I'm doing the example on AMD. This is what I'm looking at for AMD tomorrow on Monday, right? It looked like AMD got a lot of confirmation in one direction, but you never want to be 100% sure. Of course, you want to make sure when it's live, you pay attention to what's going on and you see what's happening. But if you don't already know, the Bollinger Band, right? The Bollinger Band are these bands right here on the outside, kind of trailing the stock price. And if you look, the stock kind of use the Bollinger Band as support and resistance. Kind of goes up to the Bollinger Band, it kind of comes down, right? As you can see, it came up here and it didn't surpass that. It tried to surpass it a little bit here, went back down. It came down here. This candle had the long wick coming down, showing that it didn't want to mess with it, right? So that's the first indicator I wanted to go over with y'all today, right? That's the Bollinger Band. Now we on a 1-day chart. If you look at the 1-day chart, we are currently at the top of the Bollinger Band. And on top of that, this candle has this long wick, right? Whenever you see long wicks and the candle is towards the bottom, that means that there was a lot of, the stock attempted to go up, but there was a lot of selling pressure pushing the stock back down. So the Bollinger Band says we're bearish, and so does that last candle on the daily chart, that red candle with them long wicks up at the top. So let me look at some other stuff. So we got the RSI. Now the RSI, we got a range of 80 and above is overbought, 20 and below is oversold, right? We are at 70, so we're closer to that overbought range, which means we got more room to go down than we got to go up tomorrow, right? And for the stochastic oscillator is similar. It's a range of 80 to 20. And on the stochastic, we are 89, right? Seem like we got to cool off, right? But those are indicators, right? You can't really depend solely on indicators. So we're going to go through, we're going to really look at this thing. We're going to see what's happening. All right, so now let's look at some moving averages, right? So on this chart, I got the 50-day moving average, I got the 200 moving average, and I got the 10, 15, and 5 as well. But we only talking about the 50 and 200 moving average, right? So what I'm seeing right here is a moving average crossover, and that's right about here, right? So with a moving average crossover, it kind of changes the direction of a stock, right? Or it confirms a change of direction of the stock. The 50 and 200 crossed over right here, boom, boom. So that's showing me that we could be going in a downward direction. Now, even if we go up, the 200 moving average, which is this black line right here, can play as a level of support. So if we do go up tomorrow, you want to be looking for the stock to go up to this level and come back down. If it does start the day out going up. But I got a feeling it's not even going to that support tomorrow. All right. What else we looking at? All right. So now we in the chart. Let's see what's happening. All right, so I never used this indicator on this channel before, right? I actually can't use it because this is a picture of the chart. But I was going to show y'all the Fibonacci retracement. If you haven't ever used the Fibonacci retracement, it is a good indicator. It's an indicator that shows you level of support and resistance. So these levels of support and resistance that I be drawing out for y'all in every video, the Fibonacci retracement indicator does that for you. And I'm going to find a way to show y'all that. I'm going to do it somehow, some way, and be able to show y'all that on the camera. But since we can't do it, don't worry about it. So when it comes to patterns, right? Patterns are usually either continuations, right? Which a bear flag would be a continuation, or it would be reversal, right? So this is what we're looking at. Right here, right here is support. It's support, boom. It's support, but it also like, it's right there is support. So in this trade, you don't want to enter this trade really until it comes through that level and the candle like finishes through that level, not the candle like pops through it, but the candle is still going and it pops back up. Wait for that candle to finish and start another candle going down. And that would give us a bear flag, right? Or if it wants to be like in a consolidation mode, right? And it kind of, because it's not necessarily a bear flag unless it come back down, you know what I'm saying, and then do it. That's more of a bear flag. So it could pop down a little bit to that level of support, go back up, and then come back down and have like a level of consolidation before tanking and going down. But we can also come down to support and go back up, creating a double bottom, right? So with the double bottom, you don't get in the double bottom. And look at that, that's a strong level of support too. That's not a double bottom until it popped through there, right? So a little bit above 205, let's say 205.20, a little bit above 205 and a little bit above 210 are entry zones for tomorrow. Don't jump right into stock. See what's happening first before you enter, right? But also on the MACD, you see the day over here started red and the MACD is crossing over, showing that it's trying to reverse to go down. So I got a strong feeling it's going down, but you got to be prepared for whatever. So let me draw some more resistant levels for take profit, right? That's strong resistance right there. And of course, the third level would be the peak, all the way up top at the 227. So those are three take profit areas if it's going in the upward direction, right? So, but all gaps don't get filled, but we still got some more gaps. So if AMD really trying to come down, we could call this support, and then let's do this support, right? And if it passed through any of them three, it's either coming down to this fourth level of support or it's gonna close this gap. These are take profit if you're doing a put option, or entry zones. It's an entry zone if it busts through this, you know it's going to this level. If it bounce up from here, then you know you could either take profit here because it might bounce back down here, or it could continue going up. However it goes, you use these areas to decide when you're going to get in and get out, but don't be in there all day. Don't be in there too long, right? So let's look at something else. I'm giving y'all the whole game today. All right, so now we on the hour chart, right? And the hour chart shows some strong pushback. I mean, strong, like that thing is being pushed down. Also on the MACD indicator, you can see the MACD indicator crossed over and it is heading down, right? And these last two candles, they got wicks on top of the candle. They got them wicks showing that the stock tried to go up, but it don't want none right with that right now. It's being flushed back down. Overall, it's looking like a put option for AMD tomorrow, man. Don't stay in the market too long. Also on Webull, you can look at trading volume. You can see how many people are buying or selling, whether call options or put options, right? So I pulled it up and it's a whole bunch of put option orders an hour before market close. And the reason why is these people are predetermining, they're guessing that the stock is going to go down the next day. So they're making the order the day before so that way they can catch the pre-market action on the way down instead of just placing their order in the morning. If the stock go down $1 in pre-market, they could catch that extra dollar and get extra money. They could even get out as soon as the stock market open. But I'll show a picture somewhere on the screen here about everybody doing bear calls right before the market close. Y'all get this money, man. I'm Mike the Money Motivator. Like and subscribe.